Hi, good afternoon. Do you think this correction will come before the election outcome, or do you think you'll have to participate on the way up only?
Well, I think before I answer this question, I must say that the margin of safety is increasingly coming down and becoming more and more narrower. But in a run-up to the election, if we were to just take some of the events, I think a lot of them are still very unpredictable. Because even this rally which happened, it happened in the month of March itself, pretty early, though a pre-election rally was expected. So I think it will be very difficult to guess whether the corrections probably will happen in the month of April. My own sense is that as and when the different phases of elections probably are going to get over, some people definitely, with an ear to the ground, would definitely know about what is the trend in the exit polls. So to that extent, I think there could be some amount of interest which probably would still remain. Of course, there is no doubt that even taking all this into account, markets have become really quite expensive. It is trading significantly ahead of its fundamentals. And of course, we all know that it's because of the expectation that one man is going to preside over the new government as and when it comes. That is what the expectation is. So I think the risk would certainly be there that there can be a correction. But even if there is a correction, I believe it will be short-lived. I think markets will still continue to look northwards, and that is where I think the risks will continue to increase as we head towards the counting days.
So where would you say you would take money out of in terms of the stocks or sectors, Dilip, that you think have become now prone to higher risk?
Surely, I think what I would do is, in a run-up to that, as my advice would be that gradually take at least 25–30% money out of the markets. I think as you run up to the final D-Day, when the counting is going to happen. So I think some of the sectors which probably look very much ahead of the fundamentals, I think banking certainly is one amongst them. I think a lot of expectation is already getting priced in. A lot of expectation is there from the new government, that with one magic wand, probably a lot of problems could be solved. Probably it could take quite some time to happen. And I think the asset quality will still continue to be under pressure in the short to medium term. And that probably is not getting reflected in the price, the way the prices have moved up. So banking sector is something which probably I would be a little more careful as I run up to the elections. I think even capital goods sector is something which is running ahead at the moment, significantly ahead of the realities on the ground. So I think these two sectors certainly requires a review in case if you are over-invested in some of these.
Okay, Siddharth, what's happening with both Tata Motors and the DVR? Because all through the last 10 or 15 days, we've seen the narrowing of the gap. Today, after a long time, we've seen the stock do better than the DVR. Any data that you picked up?
Data of DVR ever since it was there, it used to trade previously in a range of 50% to 60% band of the main stock. There was a time, in last one and a half year, that this discount went significantly. I mean to say, it was trading at 40%, 45% to the main stock. Now there is a bullishness which is coming into it. Stock has gone up. People are trying to justify that why the discount is higher, and hence instead of buying Tata Motors, people are buying DVR. So I don't think so DVR is some different story compared to what Tata Motors has. I am not going to buy Tata Motors at this point of time. If you remember, when Jaguar Land Rover was doing good, people spoke about that this is now an international company and we don't see that India is contributing in very big way. Now at higher levels, you are justifying that CV sales in India is improving, and hence this stock is buy at current level also, and some broking house comes with a target of near $500. That is not a reason to buy the stock. The stock was good enough buy at 360 odd levels. Beyond 430, 440, I don't see significant upside immediately in this stock. So I won't be buyer of DVR or motor at this point of time.
Okay, Abhijit, a word on the Nifty. It's now struggling, or consolidating around the 6,800 mark. Would you be buying the Nifty or shorting the Nifty at current level?
Anuj, at this juncture, close to that 6,700, 6,800 range for the Nifty cash, as I said some time back, there is a evident supply coming in from a long-term line which has been holding all these swing highs since Feb 2012. Bottom line is close to this 100-point range. There is some serious supply for the market for sure. And you know, the way Nifty index have been showing strength this week, it's very likely that you know, holding onto these grounds can be a little tough. One spike down, probably a 50-point a dip, can lead to fast profit booking from the market overall. So I definitely won't be a long trader of Nifty at this price. From a contrarian point of view, one may look to short, but if you are one that follows the trend, I think as long as the short-term supports, which is close to that 65.50 for the cash holds, I think this is a market, this is the price and time where Nifty will do good if it tries to consolidate a bit rather than extend further from here on.
All right, gentlemen, stay right there with us. We're going to slip into a quick break. When we come back, the last 5 minutes or 10 minutes of trade coming up on Closing Down.
Take a selfie for India. Simply take a picture of yourself with a watermark after voting and tweet it to us at #selfie4India, and we'll put it on television and firstpost.com.
बॉस ये लो पैसे और ये गाड़ी मुझे दे दो।
चंद पैसों के लिए गाड़ी नहीं देते तो देश क्यों?
India, vote smart. After sprinting across 5 cities around the country with much fanfare, Investathon 2014 ran its final dream run in the commercial capital city of Mumbai.
सबसे पहले अगर इन्वेस्ट करना आप अपनी हेल्थ पे करो.
Everywhere, wherever you put this event together, people find it as a big way to participate and stay involved with the exchange.
NSE and CNBC TV18 present Investathon 2014 at these times only on CNBC TV18. Presented by National Stock Exchange. Radio partner 92.7 Big FM.
Did you know having a voter ID doesn't mean you can vote? Your name must also be in the Election Commission voter rolls. To check, SMS your voter ID number to 98454 98454.
Nobody knows it all, but we all know a little something. And if those little somethings came together, we could do almost anything. Like windows that turn sunlight into electricity. It may seem like magic, but it's simply chemistry. The same chemistry that can make plastic bags compostable and wind turbines more durable. Good connections today can make for a better tomorrow. That's why we don't just make chemicals, we create chemistry. BASF. The chemical company.
We will continue to significantly
it will have an impact on
the government in India is
what happened in Cyprus.
Our economy is poised for
we decided to lower the
every time you blink you miss something that's shaping your world. Your World at 10 at these times only on CNBC TV18.
Your World at 10, brought to you by
99acres.com.
Welcome back. This is Closing Bell. We've got about 10 minutes to go before the end of trade and a panel of experts to talk you through the last 10 minutes of trade. Dilip, if I can come to you first. I was looking at some of the stocks that have done really well this month, and in them, I think, Tata Steel, Ambuja Cement, Sesa Sterlite, are these stocks that you would continue to put money in, given the sort of the lower risk profile you're talking about as we head towards May 16th?
I think within the pack which you have mentioned, I think tires certainly qualify for investments. I think cement is one which probably still merits a look, though it has really moved up quite a bit from the low levels. But these two sectors are the ones where I think going forward, possibly we'll see that the top line will still expand and the bottom line will still expand more than the top line. And I think even the return parameters are going to improve. And more important for cement, they still continue to throw a good amount of free cash. So these two sectors certainly remains on the radar. As far as the rest of them are concerned, I think they're typically a cyclical ones. And I, for one, looking at the way the things are evolving around the globe as well as in India, I'm not too sure that whether beyond the momentum, these sector really needs to be taken on a long-term basis a little more seriously.
Okay, I'm sorry, I might have miscommunicated. I meant Tata Steel and Sesa, to talk a little bit about the divergence that we're seeing in the metal space, especially in the last few days.
Well, I think both the stocks are moving up with some very specific reasons at the moment. So still on a longer term basis, I would not really look at both the stocks. I think on a shorter term basis, there would still be at best a momentum play. So I don't think that both the stocks really deserve a long-term look.
Okay, Siddharth, Adani Group stocks, most of them in the F&O market, of course, so no circuit. Adani Enterprises up 22%. Purely speculative, or have you seen any kind of cash commitment as well?
Volumes are quite high, Anuj, no doubt about it, when you get such kind of price action. So there might be some people who are quite certain about some of the political party which would favor this sort of stocks over a period of time. And hence, as elections have started, there is a fresh sort of buying which is happening. I am not tracking off late Adani Enterprises, but today morning we had generated a Adani Ports buy call, but that was purely on technical basis, nothing to do with F&O. Stock had moved up from 140 to 185, 190. And after that sharp movement, it was consolidating in 15-point range. And above 192, there is a breakout. So I think technically the stock would have further upside from current levels. But these are not stocks which we hold it for a very long period of time. When I say long period of time, I'm talking from traders' perspective. So 2-3 trading sessions max, and you move out whether you make money or loss.
Okay, Abhijit, any Adani Group stock that you like at current levels?
Well, Anuj, if I have to pick one stock from the list and then I need to have a medium to long-term point of view, then Adani Ports definitely stands out. Adani Enterprise definitely has moved really fast, backed by pretty decent cash market volumes as well. But these are the stocks that one can't approach from a very short-term trading point of view. Yeah, one can probably swing trade into them. But at this kind of price and time juncture, probably one should approach this pack, especially Adani Ports, from a slightly longer point of view. I say this mainly because of the fact that this stock has the best long-term charts amongst the three. So probably if I have to pick and accumulate a bit, probably Adani Ports. The rest one can look to swing trade into them, and Adani Ports relatively a better cash portfolio stock.
Interestingly, the BJP manifesto, I think, is the only amongst the three main manifestos, Congress, AAP and BJP, that talks about a port-led infrastructure strategy, right? So they made specific mention of, focusing on port-led infrastructure development in the country, which is a good thing, I would imagine, for all.
I don't read manifestos because I think most of the policies are visible. Of course, that could be one factor that could be leading.
From Modi, we'll talk about stocks. Yeah, Siddharth, you were talking about Adani. I was just looking at some of the mid-cap stocks that run really well this month, it's an interesting mix. I think the top three is Mahindra CIE, BEML, and Suzlon. One is up 51%, that's Mahindra CIE, BEML up 40%, and Suzlon up 34%. Any of these you track and think look promising from here on as well?
No, Minka, I am not tracking these counters. I track mainly F&O counters.
So none of these?
But at the same time, none of these, but I just want to, point out some observation, at least in today's trade. Look at the stocks which have gone up today in main pack. Reliance Infra, Reliance Capital, JP Associates, some of the counters which have not moved at all, Unitech, such kind of stocks are going up. And now people are like, cocksure that, this market is not going to correct in April. That is the time when, market gives you surprises on the negative side. When I say surprises on the negative side, I'm not talking about big correction or a trend reversal. But there might be 100, 150 points correction in Nifty. And most of the weaker hands are in mid-cap. Now in this 150 point correction, you will see there would be a mini carnage sort of in mid cap which would happen. So stay away from mid caps at this point of time and buy some puts. That's what we assessed.
Okay, by the way, the Nifty now, let's pull out the intraday chart. It's been very volatile, in fact, in the last half an hour of trade. Within the last half an hour, it went to the high of the day and it went to the low of the day. So,
and currently well below 6,800. It's almost 20 points below that level.
Indeed, 67.81 is what we have. So let's just talk about a couple of stocks that would have led the market lower today. Of course, ICICI Bank, intraday chart of ICICI Bank. Let's pull that out. That really is one stock which at this point in time tells you where the market is going. And in the last 15 minutes, it's mirroring in what the Nifty is doing. So ICICI now at 1240. So that's looking quite interesting. Dilip, wanted your view on the Sun Pharma Ranbaxy deal. Since you track both these companies, do you think there could be some more re-rating for Sun Pharma? Or do you get a sense that maybe it's hitting peak valuations?
No, my own sense is that as we move ahead, I think Sun Pharma will definitely get re-rated because the size is going to go up. The free float possibly will go up. And of course, the fact that it's going to become, even market cap wise, is going to become quite big. But more important, I think Ranbaxy really appears to be a good pick for them at the moment because they're not paid any expensive valuations for that. And I think, in our opinion, most of the problems for Ranbaxy possibly could have got over in next 6 months to 12 months is what our take was with Daiichi in the seat, though they had not succeeded in the past. But now taking Sun Pharma management into account, I think this probably will get resolved much more quicker than what all of us are thinking. And I think just purely Ranbaxy per se also has a phenomenal prospects because the margins are only 11% at the moment and Sun Pharma is 35%. So even if Ranbaxy has what we all think that over next 2 to 3 years will move up from 11% to even 20%, we are talking about doubling the profits and even generating good amount of free cash and improving the return parameters. So taking all this fact into account, I think that maybe Sun Pharma is in for a good re-rating. Gradually and more investors probably are going to invest much more.
All right, so let's talk about the market closing.
Before you get there, Anuj, if you just want to take a look at some of the stocks, since you were pointing out the stocks that have not done very well in the last half hour of trade or so, I think DLF has given up quite a bit in that last half hour. L&T down 1.5% in that last half hour or so. PNB, ICICI Bank, you already spoke about some of the losses in the banking space. BHEL is down in the last half hour or so. Bharti Airtel is also down in the last half hour or so. So those are some of the stocks that have given up a bit in the last hour or so of trade.
Indeed, and I think of these, L&T and ICICI Bank, of course, would have been the biggest responsible factors for the Nifty actually closing at day's low. In fact, you can add Infosys as well. That also lost about 1%. I think close below the 3,200 mark, yes, 31.99 on Infosys. So that also quite clearly was working on the way down. Apart from that, ITC was down for the market today, 1.5% lower on ITC. Amidst all the underperformance for FMCG stocks, at least ITC is one stock which has been able to do reasonably well, but today it was down in trade. Metals were down today, Hindalco, Tata Steel, at least two counters were down in trade. Even Sesa Sterlite was down. Pharma was down. Dr. Reddy's was the biggest loser, in fact, down about 3% or so. Sun Pharma was down 3%. Lupin was down about 2%. And of course, IT was down another day running. HCL Tech 2%, Tech Mahindra down 2%, apart from Infosys, which was down about close to 1%. But in spite of this, a good day for a reasonable day for the Nifty because you had some winners from different sectors.
A better day for the mid-cap space, though we have given up some gains from where we were about an hour ago. We're ending, I think, 1% higher on the mid-cap index. And some of the stocks you want to talk about or keep an eye on that have been star performers in today's trade: BEML up almost 20% today, Mahindra CIE up 16% in trade today, NCC up about 9%, Shrey Infrastructure up 7%, Punj Lloyd up 7%. So a bunch. India Bulls Power up 6.5%, HDIL up about 6%, Jet Airways up 5%. So a bunch of stocks that have done very well in the mid-cap space today. Only a small bunch of stocks that have not gained in the mid-cap space, and those include Alok Industries, Bajaj Hindustan, TV18 Broadcast, First Source, HCL Infosys, Lanco Infratech, and then Sri Renuka, which was amongst the losers yesterday as well. About a handful of stocks not doing very well in the mid-cap space.
Indeed. One more point. We mentioned in the morning that, watch out for power stocks today because this really has been the theme of the market. After a big run, next day the market consolidates and power stocks do well. So today you had Tata Power, BHGL and NTPC, all the three power stocks from the index up about 3 to 4%. So that was one sector which did reasonably well in trade today. Let's get back to our experts then. Siddharth, any strategy on Bank Nifty? I mean, that really has been the big leader for the market. I know you're slightly cautious on the Nifty and maybe even the mid caps, but what about the Bank Nifty?
Anuj, I'm a bit confused over there because PSU space is looking good. SBI, PNB, some of the mid-cap PSU banks, though we won't be going long as of now in mid-cap PSU, they are looking good on charts and from open interest perspective as well. But ICICI Bank, which you guys were talking about, HDFC Bank, HDFC Limited, though it's not part of Bank Nifty, these three are slightly in overbought zone and are on long heavy side. So there we are expecting some kind of long unwinding. Though I'm cautious on market, I'm expecting this correction to happen on back of long unwinding rather than formation of any short positions. Even if you look at FIS data, Anuj, yesterday's data, because you track it closely, I'm saying that's why. Nifty 5% built up, 6% built up, sorry. Bank Nifty 10% built up. In actual data, and if you look at FI's data, there was hardly 2.5% built up, which means that now the more long positions are getting formed in Nifty by weaker hands and not stronger hands. So this is the time you have to be cautious. So though I am a bit confused on Bank Nifty, I still won't go ahead and buy Bank Nifty, though the view is more clear on Nifty that you might expect 100-150 points correction. So stay away from Bank Nifty, buy some puts of Nifty and trade with negative bias for next 2 to 3 trading sessions. That is what our call is.
All right, gentlemen, if all of you are so cautious, Dilip, are there any stocks or sectors that you might in fact put money to work to at this point in time, or would you in fact only be pairing positions and booking profits?
Well, on a selective basis, I think this oil marketing companies look reasonably okay. I think particularly HPCL looks pretty interesting from the current lot. I would still go for United Phosphorus, which is still once again available at a very reasonable price, still at something like 8-9 times, and still growing at 15% in the bottom line. So that's a stock which probably can still do wonders. Something in pharma I would certainly look for is something like an Aurobindo Pharma, which still looks good. Otherwise, by and large, I would still try to, as we go forward, gradually book some profits and probably keep some cash in case if some eventuality happens.
Why not BPCL? When you spoke of OMCs, is that because it's run up considerably? In fact, it's the best performing stock on the Nifty this year.
Sure. I think between the two now, I think HPCL looks increasingly more attractive. Okay. I think if you were to just compare that overall, it has got a market cap of just around 10,000 crores. And the replacement cost itself will be close to 85 to 90,000 crores. Turnover is about over 2 lakh crores. And margins is just about 0.7%. So even if that margin goes up from 0.7 to around 1 to 1.25%, it would mean a huge thing. And possibly some of the things probably will lead to that is what I would broadly understand from this particular company. So I think between the two, HPCL certainly looks very good.
Abhijit, what about ONGC? That's one stock which has started to underperform. And maybe a word on Reliance as well, which has been a big stock for the market for the last few days.
Well, the pack has played off fairly well. Reliance for one stock looks fairly nicely poised if we see an extension of the move that we have had from the market. And for that, we have to have an approach of, let's say, another year or a little more than that. So what I'm saying is, if we have the next bull market in the make, and if that extends for the next 2 or more than that, then within the large cap oil and gas stocks, RIL definitely is one stock that is likely to outperform, keeping in mind the years in which the stock did not do much. ONGC, on the other hand, is slightly stretched, and it was stretched 4 or 5 days back, and what we are seeing is a bit of cool off from the highs. The stock is reacting from the very crucial, wall of supply, as I say, the range of 330, 335, from where it has reacted many times before in the past. So the stock is likely to cool off a bit, probably find some support, and I'm closely looking at a level of close to 305, 307 in the cash market. If it holds well, probably it will do good if it consolidates.
Okay.
A view on IT stocks, Siddharth, ahead of next week's earnings?
Infi, completely neglected. Otherwise, we would have discussed in stretch about Infi 2 weeks before its results. But because of this May event, nobody's discussing about that stock. And for right reasons, not much of activity in options front, but implied volatility has already shot up to 42, 43 odd levels. So don't buy options. Anyways, we are not expecting huge volatility post result also in Infi. So we are not trading there. We are short on Tech Mahindra. We have just generated trade today itself. There is a lot of short positions which we saw built up day before 3%, yesterday 10% short built up, and today also there is a breakdown in stock. So that is one stock which we are short. Otherwise, we are not very particular bullish about IT space. Despite we are cautious on market, people would generally say that IT would bounce, but we are not expecting that either.
Dilip, that's interesting. We haven't really discussed IT stocks in detail because of the election outcome, and the whole discussion has been about high beta names. But has the point come to maybe accumulate some of the stocks? Is the correction good enough for you?
Very much. I think as when we talk about that, the margin of safety is coming down, probably IT would still qualify as one of the sector where probably slightly on a beyond elections also, I think this is a sector which can really give some reasonably good returns. And the way some of the stocks have corrected, maybe on a risk return basis, so if you're going to lose 10 rupees, so maybe the gain could be around 30-35 rupees. So that is the kind of equation which we are seeing for some of these IT companies, especially Infosys, Wipro, even Tech Mahindra. Maybe they'll correct some more, and maybe post results, Infosys possibly could be available slightly lower, and which may have a contagion impact in a bearish way on some of the other stocks, but that would be an opportunity to buy.
Abhijit, very quickly, your top IT pick for next week?
Well, the pack have definitely moved down and into a confirmed downtrend. So if I am looking to initiate a contra buy into the space, Infi is one stock that is on my cards because the rest of the large cap names have just broken down. But the time and price is not ripe yet. So I sense that the stock may drift a little further down, close to 3050, 3057 in the cash market. Decent amount of support there. Probably if it manages to halt there, I am probably in terms of risk reward ratio, that's a better range to buy into the stock.
All right, gentlemen, we're going to thank you for that, for all the views that you've shared with us today on Closing Bell, and thank you for your time. We're going to slip into a short break at this point in time. When we come back, we'll break down that Piramal Enterprise sale today that helped the stock surge almost 5%. The company is selling back its stake in Vodafone to Vodafone for 8,900 crore rupees. We'll come back with details on the other side.